Welcome back. You're with us on Closing Bell, and let's introduce our next guest on the show. Pashupati Advani of Global Foray is with us. Pashupati, hi, good afternoon. Always great having you on. So, we were just speaking to two experts to figure out if we should be really scared and worried with this rise in US yields or not. Those two gentlemen said they'll buy the dip. Now, what about you? Looking at stocks here in India, we've not had much of a dip, to be honest. But what would you do in this patch of consolidation? I think you're on mute, Pashupati.
Yeah, sorry. Yeah. Now, one of the things we have to do is actually wait for the reaction of the US, because if there's a big dive in US versus a gentle dive in US, and so far it looks like it's going to be gentle, then there's no cause to worry, and I guess one should buy on dips. But if there's a deep dive in the US, then there'll be a jump from everyone to seize opportunities. I do see some nervousness in US in commercial real estate because people are actually walking out of leases and defaulting, which is another challenge. So this is all going to pull money back to the US, and it's coming from every market in the world, including ours. So, that's what it is. Surabhi?
So you think this is going to be a deeper drawdown here in India? I mean, we're off, just about 600 points from the top, from 20,000. Would you be preparing for a deeper fall?
No. What I'm saying is that if the US has a deep fall, if we're basically going to follow them. If there's a gentle fall in the US, then there's an opportunity here to buy on dips, because we'll go down a little bit and it'll be nice. If there's a big fall in the US, then I think there'll be a big fall here. But I think the money will go first to the US and then come back here. So then there'll be a bit of a disconnect for a period of time. So I honestly feel there aren't going to be any, what you call jhatkas. But I do feel that the market is under pressure globally, equity markets, simply because the yields are so attractive, and it's just, today it's just a lot easier to keep money in the bank. You're getting, 7+ on FDs. So why would you even, get excited, be perturbed while you wait?
Hi, Mr. Advani. Good morning. Good afternoon, Nigel on this side. I hope you're feeling much better, as we speak. Well, as you said, Mr. Advani, the markets are a little bit, in a bit of a tizzy. But sometimes that provides good buying opportunities. You have given us a couple of stocks in the past. J. Kumar, I remember, was a stock that we spoke about. Paytm was another one. In this last, couple of months or so, what have you been buying?
No, actually, I've actually been, Nigel, sitting on my hands, because I honestly feel that this is a period of consolidation, and the market is feeling heavy, according to me. I mean, it has got a nice, what I call a G20 run, where it reached 20,000. Now it's back at 19.5, below 19.5. The challenge is some big stocks are, have come off a lot worse. And, particularly the larger banks, the IT stocks are also off, So I'm just saying that, there is concern. These are these big stocks that have finally decided to come down a little bit. So I am concerned. But on the other hand, I see that our government wants to do some infrastructure, it wants to demonstrate. So therefore, there is some bullishness in steel, cement, because the projects are still coming. They're driving it. They're leading from the front, which is great. So, there are obviously opportunities in those. But I think the opportunities are in the heavier, hard stocks rather than in the soft, even the new wave stocks. Because I just think that today you want engineering, you want hard engineering, you want hard numbers, you want hard materials, and that's where the returns are going to be.
All right. Yeah, Mr. Advani, you briefly mentioned, I think, tech as well, besides, the hard economy or the old economy stocks as well. What's your view on tech? That surprised everyone, right? There's so many headwinds. You have rising yields. You're not going to be bracing for a great earnings that are coming up. But these stocks, they continue to do well. Even in today's session, if you have to, point out what's leading a bit of a recovery, it's the IT index. So how do you position yourself out there?
See, the reality is that the dollar looks like it's getting weaker, and that obviously is good for IT. But they are not able to, according to me, perform in terms of changing their business model to be able to take full benefit. And the real headwinds are the AI, the ChatGPT, all the things that are replacing what we've been doing in the AI space in India. So those companies which are large, who have big presence outside India, are managing to tread water, but the ones who are not are obviously hurting a lot more. So, the big 4, 5 are fine. The next lot are in a different, they're not able to benefit. They're not able to benefit at all.
I know you're cautious on the markets, but what about HDFC Bank? Is that a safe stock to invest in? It's gone through a long period of consolidation, price correction, underperformance. Is it time to look at HDFC Bank?
See, HDFC Bank has been a bellwether in every portfolio for a long, long time and has performed very well until the merger. And I personally felt that when the merger took place, it became too much of the index and it had to be pared down. And that material, if you want to call it in the old stock market parlance, is, according to me, still in the market. It's an overhang in the market. As a bank, it's a performer, it's a leader. But I think that, they even had a press conference about a week ago, where they actually said they're not going to be able to grow as much. They're basically trying to mind expectations towards the lower side. So the price has effectively looks like it's coming down. And I think, you move from 1650 to 1525. And, I think personally, it'll probably go down. I have a position. I have, a hedged position against it because I'm not so comfortable holding it, but I've had stock for forever. And, but it should be very much part of everyone's portfolio because it is the largest stock in the index, right? Almost second largest or second largest in the index.
Pashupati, I wonder whether you've owned the Mazgaon docks and the RVNLs of the world. There's been one phenomenal move, right? So no, don't have them?
Missed that one. The only one I kind of looked at and then sort of shut my eyes and went up by 20% of that SVJN, which did their offering. I haven't seen it since they did the offering, but they were... They're a hydro player, so they're definitely, it's just money straight from, it's like oil. It's coming money straight from the hydro into the bottom line. So it's actually great.
Yeah.
It's off a little bit from the IPO, but I think that, it's definitely one that should be looked at because, we are looking at green energy. Hydro is the cleanest form of energy. Once it's created, it's there forever. So, all the hydro players have done extremely well, and this one will also continue to perform, as long as all the money isn't sucked out of it.
Okay, so that's SGVN. Since we're on the theme, broadly, what do you think about the way we've seen this absolutely intense PSU rally play out? And they're not correcting too much, these stocks, though they've gone up 100, 200, 300%. And RVNL is down some 10, 11% from the top. That's it. So you've had the railway plays, the defense plays, even power. Coal India. The other day, Nigel and I were staring in disbelief. I think it was towards the end of September. Coal India was suddenly up 20% in 1 week. So if you were to continue to hold on to PSUs or buy any fresh PSUs, apart from SJVN, any other themes?
See, the thing is that the government also needs to realize some cash by selling off some of the juicier PSUs. And they're trying to sell away the good companies where there's still some kind of, they sell 5%, 10% into the market. Then they can do secondaries. They can sell, LIC probably has a position in them along with the President of India. So they can also continue to sell. So that provides liquidity. So I think that's what they're trying to do. They're trying to get the public into believing that the government is doing well for these companies and is giving them business. Now, obviously, you've got this railway line coming from Mumbai to Ahmedabad. Those companies that are going to benefit, most of them are PSUs. So they should be bought. And, you may not see the return immediately, but definitely once the line gets going in, one cycle, it'll be fabulous. But till that happens, you just have to sit on it, and you probably won't even see much dividend in the interim because you're continuing to spend the money on growth. So, but definitely these are stocks that should be looked at because they've been undervalued for so long. There is some value in them.
Okay, all right. Mr. Advani, what about Pharma? Do you believe all the bad news is in the price? If I plot, say, a 5.5 year chart on the index itself, there's virtually no movement. Individual stocks, they've come back though. What's your view at current reckoning on Pharma?
They're starting to consolidate, and they've all been through that bad period where they failed FDA inspections. They've got their act together, they've cleaned it. So they're actually looking at a consolidation phase and an upward phase. There is some issue on some of the generic drugs getting caps on them. So that's what's kind of putting a sort of lid on them. But the reality is, and then of course, you've got someone like Cipla, where the promoters basically put the company up for sale. So that's going to be interesting once that happens, if somebody comes through. But honestly, our pharma industry is one of the strongest in the world. It's here to stay. We have a population, I can tell you, 230 million diabetics. Everyone's on high blood pressure. Everyone's on cholesterol. So that industry is here to stay. And, even if we don't have to export, the domestic industry is just so huge and it's getting bigger and bigger. So it has to be there. Yes, it hasn't been a great performance. It's been lackluster, but that's basically because of price caps. But I think that will change.
Pashupati, thank you very much for joining in. Need to slip into a very short break. On the other side, we'll get you a check on what dealing rooms are saying in our segment D Street Chatter. We'll also get you a few BTST calls from our technical experts.